Tom Lydon is with us, President, Global Trends Investment Editor, and proprietor of ETFtrends.com. So it's great to see you, Tom. What are you thinking here when you see the markets up, well over 10%? What a great run this week has been. You see the Fed and Congress working on more stimulus in some way, shape, or form. Your thoughts?
Yeah, absolutely, Nicole. The government's done a great job going blow for blow with the negative news that we've got regarding the economy and unemployment. And George did a great job of outlining how that reflects down to investors. What's going on in the bond market, especially in the corporate bond and high yield market, is really important. ETFs play a big role in that. As you know, usually ETFs account for about a third of trading on the big exchanges, but now it's about 45%. And shoring up the bond market is a big part for investors today, especially after the last 5 years. Investors have been chasing yield, so they've been moving from the safety of treasuries over to corporates and high yields, putting themselves in a situation where many were kind of shell-shocked with this current decline in the market. Having the government come in to buy corporates, high-yield bonds, and also fallen angels really gives a lot of added support and confidence to investors today, and you've seen that in the markets.
You expect the volatility to continue? I mean, it seems to now be some good news here to the upside as we look at these charts. We're off those March 23rd lows, but do you expect the volatility to continue? And do you think there's a possibility we could go back to those lows?
Well, it's no one really knows at this point. However, when we see the play-by-play and the blow-by-blow that the government has put forth so far, it's been very encouraging. However, we're going to see more unemployment news next week. We also know that all this promise of getting in the money into the hands of individuals and also into companies has yet to come. So we've got a battle on our hands, and the government knows that, and they're trying to do the best they can to stay out ahead of that. I would recommend to most investors, and I think especially financial advisors, where at TD there are a lot of financial first responders, financial advisors that are out there that are sticking to their discipline. One of the big things that they did, which you could see that played out in the marketplace, is they rebalanced at the end of March exactly what they should have done. So what they did is they went in and bought more stocks and sold more bonds to rebalance their portfolios, sticking to the discipline of their models, which was the right thing to do. And guess what? Sure enough, there's been a rebound, so their clients were rewarded for that, while they also held their hand emotionally with all the things that are going on.
Yeah, right, exactly. Because, you know, when you're a leader in the financial space and your clients are calling, it's nerve-wracking for both parties. What are your thoughts on some of the ETF picks? I know you have a few for us. Tell us some names that you're watching closely, and do you think these are good buys today, for the long term, for the short term? What are you telling us here?
Yeah, well, George touched on some of them, LQD, HYG, for sure, but one in particular, ANGL, which is the VanEck Vector's Fallen Angel ETF, again, is now that the government is focusing on below investment grade bonds and shoring that market up. There are companies in there like Ford and Macy's and Delta that are part of that portfolio, which really need some support at this time, and having outside investors being able to come in and buy those bonds through an ETF like that is great. In addition, the gold market really has been strong. A lot of investors over the last 5 years have diversified and hedged portfolios by investing in gold. And it's not just the ETF itself and the fact that it's done well, but there's demand around the world for gold, especially in emerging markets, as citizens in these countries have more disposable money, move up to the middle class, they're putting that money to work, and a lot of times they're buying gold. So GLD, biggest gold ETF, $50 billion, trades very tight as far as the bid and ask spread. Something to continue to look at if you feel that we're going to see more volatility down the road.
Right. Tom Lydon, President, Global Trends Investments Editor and proprietor of ETFtrends.com. Tom, thank you so much.